In this video, I'm going to be talking about a particular financial product that many people don't know about. And the product I'm going to be talking about is the Rich Man's Roth. Hi, my name is Pascal Manigat and you're watching the Financial Ownership Podcast. The funny thing about the Rich Man's Roth is actually you don't have to be rich to benefit or use a Rich Man's Roth. And I'm going to go into deep detail on what that exactly is. So for some of you that don't know what a Roth is, I'm going to just go into a quick overview of what it is. Usually when you see the word Roth, it's usually in front of a retirement account, either a Roth IRA or Roth 401k. And really what it is tells you about the taxability of the investments that you have in that account. So in this video, I'm going to briefly explain what a Roth IRA is and how it works. So essentially when you use a Roth IRA, the way it works is you use after-tax dollars to fund this account. So it's money that you already paid taxes on. So the benefit of it is that you basically putting money in an account that's accumulating tax-free and you can access it tax-free later on when you reach age 59 and a half. And it gives you a little bit more flexibility than a lot of other accounts. And the thing is, you could actually withdraw up to your basis or what you contributed all the way up into whatever time you have the plan, completely penalty-free or tax-free before age 59 and a half. So if you contribute altogether, say you have $100,000 that you could personally contribute it in your own Roth IRA over time, you can take out that $100,000 penalty and tax-free because technically that's your money that you actually contributed. So you're just taking out the basis. So you could just take out the basis at any point without having to worry about waiting till age 59 and a half. And that's what gives it a lot more flexibility than a lot of other retirement accounts that basically don't let you take out any of your money at any point until you reach age 59 and a half without a penalty. And really what a Roth is, all it is a tax shelter. So it's not the actual investment itself. So a lot of people think the Roth account is an investment, but no, it's just a tax shelter. In the Roth account, you might have things like index funds, mutual funds, different types of bond funds or whatever you might have in there. So you can choose, and that's another thing when it comes to Roth, you can choose what investments you want in it. So it's very flexible in terms of that regard. You're not locked into only a few plans. You can basically pick whatever in the market that you want. So this is why I like a Roth account, especially if you could qualify for it. So for people that make less than about $150,000 in income, can contribute up to $6,000 every single year into a Roth account, and it has these benefits for you. So it's a very solid account. It has decent benefits where it accumulates tax-free and you get access to tax-free. And it really makes a lot of sense for Americans to use it that want to maximize their retirement income while still keeping some type of flexibility and control to some extent of their assets. And that's why I would say if you're looking at a retirement account or using some sort of retirement account, based on all the situations that we are in today and the fact that we're in historically low tax rates, out of all the retirement accounts to use, I think a Roth account or a Roth IRA is the one that makes the most sense based on today's economy. So those are some of the benefits of a Roth account. So the disadvantages to it primarily are there are the penalty fees up to, if you're taking out money before age 59 and a half, there are penalty fees you can take up above your basis. Meaning if you contributed $10,000 and your money grew up to $20,000, if you take above that $10,000, you're gonna have to pay penalty fees on that money that you take out. There's also the $6,000 limitation on the amount you could actually contribute in it. So that's another restriction, is the actual amount of money you can contribute in a Roth account is restricted. You only can put $6,000 in. And the funds that you buy within the Roth account are subject to market risk, so market volatility. Things like market swings and all these things can affect the Roth in the long term. So those are kind of the ups and downsides when it comes to a Roth account. So some of you might be thinking, what is a Rich Man's Roth? Similarly to a regular Roth, what the Rich Man's Roth is, it's an insurance contract where you can access it tax-free and it grows tax-free. Just similar to the Roth account. But unlike the Roth account, there's no penalty fees, there's no market risk, and there's no contribution limits. So it has a lot more flexibility than a pure Roth account, because a pure Roth account has different types of restrictions and limitations to it. But especially designed Rich Man's Roth, or basically especially designed insurance contract, doesn't have any of those limitations to it. And like I said, you don't have to be rich to own one. So people could actually start getting an account like that even with $500 a month. And the thing is, no matter what type of income you have, if you have $150,000 or $200,000 where you wouldn't be normally locked out of a traditional Roth account, or a regular Roth IRA or a Roth 401k, you wouldn't be able to contribute to those because you make too much money. With the rich man's Roth, basically what you're going to be able to do is you could contribute as much as you want with no income limitations or contribution limitations, while protecting yourself against market volatility, taxes, and inflation. Because the rich man's Roth uses a strategy known as indexing. So basically what it is a specially designed index universal life contract where you could get the upside of an index, say the S&P 500. So typically these accounts will be linked to an index like the S&P 500. And you'd be able to get an extent of 10% of the S&P 500 going up. So if the S&P 500 goes up 10%, you can have a cap of 10%. But if it goes above that, say the S&P 500 goes 20%, you're still locked at 10%. You can't make any more than that. But if the market goes down, say 20%, you're guaranteed not to lose money in the contract. So I guess the limitation is the extent that you can make in it, because when it comes to purely investing in the stock market, you get all the gains, but at the same time, you get all the losses. So it kind of gives you a balance of kind of both worlds, getting the upside while you're hedging against inflation, along with the protection against market risk. And that's kind of the benefit of using something like a rich man's Roth, is the fact that you have that principal protection. And even if and a good thing that you can do with it, with some specially designed insurance contracts, is because it has that 0% floor, you can almost use it like a bank account, because some of these policies are very liquid and you can access up to 80 or 90% of the cash value in the policy. And basically what you can do is, before you pay your expenses every single month, you could fund this rich man's Roth. Let's say you make, say, $60,000 a year and you have $32,000 expenses. What you can do is put right before you pay your expenses, you could put it in this account, and then later on use that insurance contract to pay your expenses. So this indexing account usually has an average return of, say, 6 to 7%. So for this example, let's say you get a 7% average rate of return in this indexing account. So what you can do, and what an insurance company will allow you to do at times, is they'll let you borrow at a rate of 4%. So you're getting an average return of 7% and you're borrowing from the insurance company at 4%. So basically you get to keep a 3% spread on your money on average. So basically what you can do is, when you borrow from these contracts, you can pay your expenses and make that spread on your money every time. So you have $32,000 worth of expenses and you're making 3% on it, that's $960. And you think about how much money you're gonna be making over time if you keep using a strategy like that. And the thing is, you can't do that at the stock market, because if you invest in some type of ETF, index fund, or mutual fund, those are all great things to invest to, but at the same time, it's subject to market risk. So if you have bills or expenses you have to pay, you kind of need a guarantee on your money to make sure that market volatility isn't gonna take any of it away. So that's the benefit of using something like a rich man's Roth, where you could kind of pay your expenses through an insurance policy and potentially make a spread on your money every single year. And the thing is, what you can do is you can use this insurance contract or this rich man's Roth to fund your Roth. And the way that would work is the same way as you would be using that to pay your expenses or whatever it is, you could use it to pay your investments. So rather than making money in one place, you're making money in two places, because you're going to be able to make that 3% spread on what you're borrowing against the policy. And you're also going to be able to make the interest or the accumulation that you would get if you're investing in your Roth account, say in things like index funds and ETFs. So basically you're going to be capitalizing in two places rather than one. And if you think about it, it doesn't really matter what stage you are in life. Anyone can use a strategy like that. You don't necessarily have to be rich, like I said, to use a strategy like that. But you have to think like the rich in order to use a strategy like that and take advantage of things like that. And really, that's all it's about. It's about taking advantage of the strategies that are out there to build wealth and grow your money in a more effective and efficient way. That's all it is. And just figuring out ways to capitalize on different types of opportunities to grow your money over time. If you found some value in this video, I post financial content every single week. So feel free to like, comment, subscribe to the channel. And if you have any questions, whether it's about any type of financial concept or any type of financial product, in the description below, there's a link to my Linktree. So feel free to contact me there. And until then, I'll see you next time. Thank you.